Last month, the Bank of Japan did something Washington never planned on. It raised its rates to the highest in 30 years and started pulling its money home. How does this affect you? The Trump administration has to borrow a record amount this year, and Japan was its biggest buyer by far. Now the cheapest money on earth, a $14 trillion fire hose out of Tokyo, is running in reverse. And if you own a home, an index fund, or government bonds, you're about to pay for it. This isn't a Fed story, and Kevin Walsh can't stop it. Start with that number because it's the one almost everyone gets wrong. On paper, Japan owns about $1.2 trillion in US government bonds. That alone makes it the single largest foreign lender to America. But the paper is the small part. The real exposure is hidden off the books, inside a web of currency deals that almost nobody outside a few trading desks ever tracks. Estimates of that hidden web run as high as $14 trillion. That's the fire hose. And it isn't a Japanese problem you get to read about and forget. It's wired straight into the price of your house and the value of your retirement account. For years, you've been told that one room decides the cost of money in America. The Fed. They cut, things get easier. They hike, things get harder. That's true for one rate, the short one. It is not true for the rate that actually runs your life. The 30-year mortgage. The yield on the bond fund sitting inside your retirement account. The interest the government pays on its own debt. Those are long-term rates. The 10-year and 30-year treasury rates. The Fed doesn't set them, the market does. And for 30 years, the biggest player in that market wasn't in Washington, it was in Tokyo. Here's the trick, and it's the simplest big idea in all of finance. If you can borrow money for almost nothing in one place and lend it out at 4% somewhere else, you keep the difference for doing nothing. Free profit as long as nothing moves. For 3 decades, Japan was the place where money was free. After its own bubble collapsed in the early 90s, Japan pinned its interest rates to the floor and left them there. You could borrow yen for next to zero. So the world did. By the trillions. Big money borrowed yen at zero, traded it for dollars, and bought American everything. Government bonds, tech stocks, real estate. That cheap Tokyo money quietly became the foundation under US asset prices. It was called the yen carry trade. And all the big players got involved. When you watched your home value climb and your index fund melt upward year after year, part of what you were feeling was that fire hose running in the background. You never saw it, you just enjoyed it. Put real numbers on it because the scale is the whole point. Imagine borrowing $1 million in Tokyo and paying almost nothing to do it. You turn that million into dollars and buy US government bonds paying 4%. That's $40,000 a year, risk-free, landing in your lap. On money that was never really yours and barely cost you a thing. Now multiply that by the largest banks and funds on the planet, running it not with $1 million, but with trillions, for 30 years straight. That's not a side bet. That became the gravity underneath global markets. It's one of the reasons money felt loose, credit felt cheap, and almost everything you own kept climbing for most of your adult life. Then the math flipped. Last month, the Bank of Japan raised its rate to the highest Japan has had in 30 years. The floor they glued everything to is gone. And here's why one small number breaks the whole machine. The trade only works while borrowing yen stays nearly free. The moment yen gets expensive to borrow, the free profit disappears. The fire hose doesn't just slow down, it reverses. Money that spent 30 years flowing out of Japan and into American assets now has a reason to turn around and go home, where it can finally earn something safe. This is not a theory waiting to happen. In the first 3 months of this year, Japanese investors sold almost $30 billion of US treasuries, the biggest sell-off since 2022. The money is already walking out the door. And this time, Japan isn't doing it by choice. For 30 years, it could keep rates at zero because it had almost no inflation to fight. That's over. Prices in Japan are rising too, pushed higher by an energy and war shock few people saw coming. So its central bank voted to hike 7-1, knowing exactly what it might set off. That's the part that should unsettle you. Japan didn't raise rates because the world was ready for it. It raised them because it had no choice. The timing was never going to be convenient for America. It was simply going to happen. So understand what you're actually looking at. The headlines will tell you to watch the Fed, watch inflation, watch the next jobs report. Those are the loud rooms. The decision that matters was made quietly, in a different country, by people who owe you nothing. If following the machine that actually moves your money sounds more useful than following the one on the news, that's the entire reason this channel exists. Stick around. Now, layer on the part Washington didn't plan for. The US government is on track to borrow roughly $2 trillion this year. Not to build anything, just to keep operating and to pay the interest on what it already owes. $2 trillion deficits used to